Hey traders, welcome back to the Forex Geek channel. In this video, we're just going to be taking a deep dive into the order book indicator for MetaTrader 4. Okay, it's a powerful tool that can level up your Forex trading game. Now, if you have been struggling to understand market sentiment or pinpoint whether it's a bullish or bearish market, this tool is exactly what you need. Okay, we're just going to be walking you through exactly what the order book indicator is, how it works, and how you can use it to identify trends and make more informed trading decisions. But before we jump into the details, don't forget to hit that like button, subscribe to the channel, and ring the notification bell so you never miss any of our trading insights. Okay, now let us get started. Right, let us just start with the basics. The order book indicator is a tool available for MT4 that is designed to help you understand market volume in a completely new way. Now, it's a volume based indicator. It's a volume based indicator that shows you both buy and sell orders. You can see what is happening around here, right? You can see that we have buy and sell orders around that zone. The indicator automatically shows you these orders, okay, over a set time frame, typically on an hourly basis. So this data gives you an insight into how much buying and selling activity is happening in the market, which is critical in understanding price movements and potential market trends. So for each hour of the day, the indicator calculates the volume of buys and sells as well as the total trading volume and then displays this information directly on your chart, as we can see the information highlighted right here. Okay, you're going to see it in the comments area of your chart displayed as 24 lines, one for each hour of the day. Now each line shows you the hour number, total volume, and the breakdown of buys and sells. Now why is this important? Well, the order book indicator allows you to spot volume anomalies, those unusual spikes in buy or sell orders that may indicate big market moves. Essentially, you are getting a clever picture of market sentiment without having to rely on complex formulas or guesswork. So now let's talk about how this indicator actually works. As I mentioned, it displays 24 lines on the chart, each representing the trading volume for a specific hour. The important thing to note here is that the order book indicator doesn't just show you the total volume, it breaks it down into buys and sells. You can see the 24 lines from the hour 0 to the hour 23, and you can see that it breaks down, the buys and sells, which is where the real power lies. So if you see an hour with a large amount of buys, a large amount of buy orders compared to sell orders, this could be a sign of bullish sentiment in the market. Like you can see in this hour 3, you can see what happened, right? Okay, so essentially more buyers are stepping in, which may indicate that prices could rise, right? On the other hand, if you notice a spike in sell orders during a specific hour, it could suggest that bearish sentiment is taking over and prices could head lower. Now, traders often look for these volume anomalies, which may point to significant market activity. For example, if you spot a sudden and dramatic increase in volume in either the buy or sell side, it might indicate that large institutional traders are entering the market. Now, this is a crucial This is crucial because large market participants can significantly move prices, and identifying their movements early can give you a strategic advantage. Now, how do you actually interpret all of this data? The great thing about the order book indicator is that it simplifies the process of understanding volume without needing to do complex calculations. If you see a period where the buy volume is significantly higher than the sell volume, then it is an indication of strong bullish activity. This could suggest a market that is likely to continue moving upward. On the flip side, if there is more sell volume than buy volume, it indicates bearish sentiment, meaning the market is likely to move lower. One thing traders watch for is an abnormal increase in trading volume. Large spikes in volume, especially if they come suddenly, can be a warning sign of potential slippages. So these volume surges are often caused by big players entering the market, and when that happens, the price may move rapidly. Now, this is where you can use the order book indicator to adjust your trading strategies, such as setting tighter stop losses or waiting for the market to stabilize before entering your position. The key takeaway here is that by keeping an eye on these volume fluctuations, you can understand the true sentiment in the market and make smarter, more informed decisions about where to enter and exit trades. So how can you use the order book indicator to enhance your trading strategy? Let's talk about a few key strategies that can help you maximize the value of this tool. One strategy is to follow the buy or sell imbalance. If you consistently see more buy orders than sell orders, it's a clear sign that the market is bullish. In this case, you might want to align your trades with the buy side, entering long positions and staying in the market until the imbalance begins to reverse. On the other hand, if there are more sell orders than buy orders, it's a signal to look for short opportunities. The order book indicator gives you real-time confirmation of the market direction, which is a huge advantage over other methods that might lag behind. Another useful strategy is to look for volume surges. A sudden increase in volume could signal the entry of major institutional players or potential breakouts. Okay, if you see this kind of surge, you might want to wait for a slight pullback and then jump in once the price action confirms the new trend. Now, this is especially true when paired with other technical indicators such as moving averages or support and resistance levels to confirm the market's direction. Finally, make sure you understand the importance of slippage. All right, when volume increases, the chances of slippage, where you get filled at a worse price than expected, also rise. Okay, by using the order book indicator, you can anticipate these volume spikes and adjust your strategy accordingly, ensuring that you manage risk more effectively. Earlier, the order book indicator was primarily available to institutional traders, but now retail traders can access this information for free, which is a massive advantage. Okay, it puts powerful market insights right at your fingertips, and you don't need to be a professional to use it. One of the biggest benefits is that it provides raw, unfiltered data. While other indicators may process a smooth the data, the order book indicator gives you the real trading volumes, no filtering, no lag. This allows you to interpret the data in real time and make faster, more informed decisions. All right. The indicator also works across all time frames, so whether you are trading on a 1 minute chart or daily chart, you'll always have access to the same data. This flexibility means you can adapt your trading style to whatever time frame works best for you. Lastly, the order book indicator is completely free to download and install. You don't have to pay a subscription or sign up for anything. Okay, just add it to your MT4 platform and start using it immediately. Okay, so to wrap things up, the order book indicator is an incredibly powerful tool for any forex trader, whether you were just starting out or you've been trading for years. It gives you a deeper understanding of market volume, helps you spot trends and anomalies, and ultimately allows you to make smarter, more strategic decisions. If you found this video helpful, make sure to give it a like, subscribe, and hit the bell icon so you never miss out on more trading tips and strategies. Thank you for watching, and I'll see you in the next video.